housing market remains red hot, with many Canadians taking advantage of record low mortgage rates, but some are feeling the pressure to lock in with concerns that rates may be starting to climb. Peter Sashecki from Everything Financial joins us this morning with some advice. Good morning, Peter. Good to see you.
Good morning. Nice to see you, Carrie.
Yeah, so we've been hearing the buzz about the mortgage rates potentially going up. Are they?
It's a relative term. Creeping up would be the way to look at it. And it's one of those things every May, it seems, and I've gone back and looked at the research, it seems the big hype is mortgage rates are going up. Better break your plan, better lock into a new one, better take advantage of it now. It happens every year, and it's fear selling, it's hype selling. Yes, Bank of Canada has said prime, they may revisit it, may go up a tiny bit, but rates are so low, going up a little bit isn't enough to run in the streets panicking about.
Okay, really good. Thank you for keeping us calm. Let's talk about locking in would mean getting a fixed mortgage, but can a variable mortgage be better than a fixed one?
Oh yes, variable mortgages are great. Unfortunately, most people don't even know they exist. The banks don't really tell you about them. They kind of offer the path of least resistance, like sell the 5-year rate, and then the banks get to lock in their profits for 5 years, which is good. But a variable rate, which is below prime, that can protect you against about 3 rate increases. And I saw a variable rate the other day for 1.55. Well, if we get 2 or 3 rate increases, you're still low. And the beauty of a variable rate is you can choose to then lock it in with no penalty, no fee, if things start to get out of hand. And it's not like rates are going to go up 5% in a day. I mean, it's a little bit at a time. So a variable is a very good option. Make sure you ask your mortgage professional about it and find out, because it's a great thing to have.
Yeah, and if you do get to the point where you are interested in locking in, I mean, what's the language that we should be using? And do you have any kind of negotiation that you can use with your bank to try to get the best rate?
Oh, you do. And there's a lot of competition out there, and it's not just about the number. And here's the problem. Mortgages have become a sales tool, not a planning tool or a solution tool. And sometimes the rates are not calculated the same. So line of credit, we talked about this before on the show, simple interest is calculated much different than compound interest. So in some cases, a 2.5 rate is less than a 2% rate. That's a whole other show for another day. But you have to know what's best for you, for your financial plan. So bring in your registered financial planner into the process of figuring out things with your mortgage person and figure out what fits your situation. Because sometimes it's a combination of the variable, the simple interest line of credit, some compound. It's not just one product that fits your needs. It might be a combination of 2 or 3 things.
I guess that's why it's important to maybe get some independent advice, Peter, because going to the bank and getting the advice, may not serve your interest in particular.
That's right. And there's a lot of calculators out there. I know a lot of my colleagues use them. We use them, where if the bank says, oh, we'll switch you to this mortgage, it's this much less, and we're going to save you a ton of money. Well, how do you know you're going to save a ton of money? So there's independent calculators. People can go through the numbers for you and see what the true savings is and what the break-even point is. We had a person the other day who said they found out they were going to save a ton of money lowering the rate. Turns out the cost was $10,000 and it wasn't in their favor. So you can't, unfortunately, just take the word of, yes, it's going to save me money. You have to see the numbers.
Yeah,
it's your money, so make sure you see the numbers.
Good information this morning. Peter Sashecki with Everything Financial. Have a great day.
Thanks, Carrie. Have a great day.